Professor Charles Nenner, and we have David Gurwitz. Professor Nenner is actually joining us via phone from Amsterdam, so you'll be hearing him on the overhead. And in person, we have David Gurwitz. I've had the pleasure of speaking to them often over the last 3 weeks, and I can tell you they're probably two of the most intelligent men I've ever dealt with. Professor Nenner has done an exceptional job of, exceptional amount of work at looking at cycles. And the main idea of this evening is cycle analysis, understanding how cycles are related, short-term, long-term, et cetera, and you'll see good examples of that. David Gurwitz is a very well-rounded man that I'm sure he will tell you about later in terms of sports and music, et cetera. But at this point, I'll pass it over to David Gurwitz and Professor Charles Nenner.
Thank you, David.
Thank you.
Thank you. Charles is listening from Amsterdam. I have this thing around my neck, and they tell me that if I don't take it off, I can't get out of the building. I'm going to take it off because I want to tell a story that today was a cycle top in security guards in Amsterdam not allowing Charles Nenner to come into the building. So Charles is actually at home because for the last hour we thought we were going to be doing something else, and for some reason the security over there, I guess Bloomberg in particular, but the building they're in was exceptional or excessive, and so Charles is home, but he's on the phone, and so we're going to talk about a few things, and he will pipe in afterwards. I'm going to walk us through a lot of charts and explain the basis of how we do the cycle work, and I'm going to walk us through a lot of different commodities, equities, bonds, and currencies, and Charles will be available to comment as well as take questions at the end. One of the questions we're going to address is whether what we think we do, is it technical? It's called Thursday Night Technicals. We're not so sure, but we'll address that afterwards. So I'd like to start, if you can bear with me, with a few thanks. I'd like to thank Dave Keller, whose kind words, we feel the same way about you, and he's been incredibly helpful. And the thing that I like most about Dave and what he's been trying to do, and why I feel so good about this, is that Bloomberg charges a flat fee, and they want its users to be able to use as much as possible to do their work. So they actually have this, no benefit to them. You're not getting any more money from this. They just want you to use the tools better. And so this is a real win-win, and it's a very enjoyable thing to be in a win-win. I also want to thank John Stevens, who's right here. If you could stand up, John, just so. John's the one who we've been in touch for a year or so, and he's watched cycles, and he recommended us. And so I really appreciate, John, very much what you did. Okay, so we're going to go through a bunch of charts, and then bear with me as we learn about how things go according to Professor Nenner's methodology, although I have to also tell you he is a medical doctor as well. This is the site, charlesnenner.com, and there's one of the photos of several of his visits on CNBC. And enough of that. 5 years ago, if you'll see down here, Dave, I need the pointer, actually, when you get a chance. There was this place called Goldman, and Charles was the keynote speaker at a global strategy conference. So he's been around for a while, and he hasn't really been that well known. And slowly he's getting well known because he does really fabulous things. Here's an example of how all the cycles work. And I'm going to spend about 5 minutes on this chart. And once I go through how this chart works, you'll understand, hopefully, how all the other cycle charts work, because even though this happens to say Intel up top, it could be any stock or stock indice, any bond or bond indice, any commodity or commodity indice, or any currency or currency indice. This happens to be Intel. This was sent 3 years ago, May 15th, 2004, and what we did was we sent it with the lines broken. Let me read what it says, what Charles said. Intel still seen as a market leader. This was back then. Cycles, however, are turning down. Today we show them separated. Based on these cycles, which I'm going to define how we use cycles, what we think they are, it looks like we've seen most of the bounce after the 2000 high. Now you see all these sine curves. And what we do, and the assumption we do, is based on an analogy that I'm going to use, which is, I think the best way to explain it is use a baseball analogy. Dave and I were talking about it which whether to use baseball or basketball. I said, let me use a baseball analogy. So let me use someone not very controversial. Let's pick Alex Rodriguez. Okay, let's put him on third base. And let's hit a ground ball to him from home plate. And just say, Alex, you have to catch the ball. He'll catch it. Somebody else stands on the same line 20 feet away, up the same line, and hits a ground ball. Someone stands 50 feet away, 100, all up the ground, all up from home plate to third base, knock down the walls of the stadium, go into the parking lot, and hit ground balls. 10 people are hitting ground balls, 20 people. No one's getting hit by them. The rules are as follows. The balls never lose power. If they're bouncing every 2 feet, they stay every 2 feet. If they bounce every 5 feet, they stay every 5 feet. The rule is, Alex, you can't move your glove all over the place. You have to catch it with your glove in one spot. How often are all those ground balls going to come to him at one time? Almost never. Occasionally, they do. If you take a look at Intel, all these ground balls, cycles from the Greek word circle, all were topping, funny, that year 2000, the top, when everything topped. This shows what it's like when they're broken up. Every stock looked like this. So Charles, when he was at Goldman at the time, called the top in the equity markets and then said 18 months later at the time it was going to be a bottom. He's going to explain how he did it later. And so this was a fairly easy one, because our system combines these cycles into one master cycle line, and you're going to see many examples of that afterwards. And that we used using Fourier and a lot of other literally space-based computing which combines these things. So very often you have, and again, this is based on monthly data. There are times, we look at things based on daily data, based on weekly data, based on monthly data, and based on yearly data. So we're getting a lot of different looks at everything. Now, Charles is a medical doctor, so he's trained to look at a lot of things at once to come up with a determination what pill to give the person. So in effect, this is the basis for everything that's going to go forward. So now, when you take a look at the prediction he made on Goldman Sachs, we sent this a month ago, and he said cycles topped and show a good low by late July. Now that you see, the blue line is the actual price, and the red line, now that you know, represents 50 cycles that the computer combined. And Charles, it's not a science, it's an art. He has to actually eliminate a lot of those cycles in order to make the red line correspond with the blue line. So the assumption is, and it's only an assumption, that this set of cycles that we have found corresponding to the blue will give us a predictive posture going forward. So when's the best time to go long? Here. And when is the best time to get out? And notice I'm not saying go short, because that's a whole other discussion. Here. So cycles give you tops and bottoms if they work. And so there's a lot of work involved. And so he looks at a lot of stuff. If he sends one thing out, there's 10 other things underlining it that determine how he comes up with the one line to say what to do. So this was the call, and it's actually what happened. So I'm going to move forward now. I'm going to cover a bunch of different things, and you'll see the process of how we did it, and you'll see some of the breadth of the coverage to get an idea that the cycles we feel work not only for all equities, as long as you have enough data. You can't do something that's public a year or two. You don't have enough data points. But something that's been trading for a while, such as here, everything we have here, copper, for instance, daily, copper cycles bottomed again, around 626. He said that on June 11th. So this is where, you make it, every trader's different. Some would go short, some would get out of their longs. Copper daily cycles, this is what was said in May. This was before. Last week we mentioned to get out of copper positions at 375, since that was our upside price target. Copper is now down 10% in a week, and there's a short-term downside price target just below 340. Traders who did go short should take some profits at that level. He's very particular about what he says. He speaks 7 languages. He's quite clear in all of them. Traders who did go short should take some profits. However, it's too risky to go long again based on negative cycles. Okay? So you stop, you read it. What most people like about it, because everybody has ADD in this business, and you get all this stuff to read, and it's too much. Charles used to write 10 times as much. Nobody read it. So you cut it down to a short amount, and in 5 minutes, in a minute, you get an idea of what he's thinking about copper or whatever it is that he's writing about, and he won't send something out unless there's something happening. So a lot of times people say, how come you haven't written about the Nikkei? There's nothing happening with the Nikkei. Don't think I'm not looking at it. I'm just not saying anything. So that was the third. Now this, I'm going to show it, and then Charles is going to discuss it later, because this is a chart that deals with industrial cycles. And just to show you that we assume, the basic assumption with cycles is that they work short-term, medium, or long-term. So therefore, if you take a long-term, such as here, going back to 1950, and assuming the data is right, he writes here that industrial cycles show weakness to the end of 2008 and then strength to late 2010. Now, this could be a half-hour discussion in and of itself, so we're not going to go there, but Charles will pipe in later if anyone has any questions on this, or later on, or even not today, we can speak afterwards, because Charles likes to open up your thought process on a lot of different things that are going on. Let's go back to corn, okay? Now here what we did was we took the black line is the actual price line, right? And the red line is the cycle line. Rather than sticking it at the bottom where you could see it that way, we combined them together so you get an understanding of the direction. Cycles give you direction, they don't give you levels. But that's a very important thing to know when you're making your decisions. So here, let's read what it says. And we go back, again, to 1950, even before. Here we show the red cycle line for corn, which shows direction and which extends for years, superimposed over the black price line for corn. As you can see, cycles indicate that corn prices are down to late 2007, December, but the bull market in corn should continue afterwards to April 2009. Okay? Now, this is yearly data determining these cycles as opposed to monthly or weekly. Okay? So we're getting a broad look and a narrow look. Obviously, corn is not corn in the cob anymore. Corn is fueling our drinks and our cars, so all of a sudden corn has a whole thing, and the assumption is, how could something in the past know that that was going to happen? And the assumption is human interpretation of events never changes. That's the basic assumption underlying what we feel is the cycles in markets. Now, we also feel that it works in things that ostensibly don't have human input, such as deficits, such as non-farm payrolls, such as of interest rates. I say not having human input, there is, but basically it's not a decision someone's going to make. Ostensibly, it's somehow a group subconscious behavior, both in markets as well as economic indicators. And that's why we have a lot of clients that are banks that have us do this research, not for what IBM's going to do, but what's going to be the rate of unemployment going forward for the next 3 years, and many things like that. Let's go to corn. Now here we show weekly broken cycles. We've got 1, 2, 3, 4, 6 of them. There were originally 19, and we removed some of them for certain statistical and judgmental reasons I won't get into now. And here, what Charles said, is the longer-term weekly corn cycle that projects most weekly highs is topping. Now let's take a look, see if I can figure this thing out. Yep. There's the red cycle. There we go. We're back in the amusement park, right? So there was a top. There was a top. There was a top. Obviously, it doesn't give you level. Just gives you direction. There was a top. So he says longer-term weekly that projects mostly highs is topping again. So based on this look, you scratch your head and go, I guess it's a top. Why? What's going on underlying with the corn and everything else? We're assuming that the human interpretation of events as evidenced by corn prices in the past are somehow going to repeat themselves. And this is based on weekly data. He's obviously looked at it daily, monthly, and yearly, and so he gets an overall view that allows him to say this, and sometimes, that's what he does. Here, we start to get away from the cycles into waves. Okay? Now, everybody, I think, knows what the Elliott wave is. The Elliott wave, Ralph Elliott came up with a way of looking at markets, and all Elliott waves based on Fibonacci. And Fibonacci, as you know, every number is the sum of the previous two. And so this is where Charles also is quite adept at this. So here, our projected cycle high in corn came right on time. We still have a downside price target of 351. So he uses stochastics as well. Old style analysis, is still in vogue. Here, we have corn again. Corn's trading around our downside price target, waiting for cycles to bottom before we buy. Everybody's different. Some people will start buying as you're going in. Some will wait to the bottom. Some to wait to confirmation to buy. Everybody has a different style. We must talk to about $250 billion a week. So everybody's different. Some people don't want to make a move unless there's a 10% move. Some of the big institutions we have 100 billion. So Charles can't write the same thing for them and everybody else unless he lays it out in a way that leaves the trader with a thought process that they themselves have to utilize and they have to think. He wants you to think. He doesn't want to tell you everything. There's a lot more than he says, but you have to think, and most people are quite capable of doing it. This was a chart we sent 6 weeks ago. This is the Kondratiev and bond yields chart. And I'm going to read it, so Charles is listening while he wrote it. Being followers of cycles, we do follow Kondratiev. Now, I assume most people here know who he is. For those who don't, let me explain. The genius from Russia who predicted at the beginning of the last century a recurring inflation cycle of 60 years. And I put a cite in there so you can learn something about him. Of course, his work's important for predicting longer-term bond yields. Many of those who believe in the cycle no longer believe in it because it's largely an agricultural cycle, so they say, and our economy is now largely a service economy. Our policy is to continue to believe in cycles until proven they don't work anymore. So this chart showing 30-year yields, although labeled incorrectly as 20-year, shows yields going back more than 100 years. We have tons of data going back. I don't think anyone has the data we have going back 200, 300, 500 years. Spend a lot of time on that because mathematically, the more data points you have, in theory and in fact in practice, the mathematics that lead to what we're going to do now seems to be more precise. It's interesting to notice that the low in yields was around 1950 and a high occurred around 1980. It's exactly 30-year half cycle. This cycle is plus minus 60 years, so we're in the period of a major low in yields. Big picture. We're looking from outer space here. We're looking at the yields. Since the U.S. 30-year bonds breaking the support line dating back to 86, as we showed last week, and we have another chart to show that. Since we did send out a cycle on the 2-year notes projecting higher yields into 2025. We sent that last month. The possibility exists that the Kondratiev low is early. Later this year, we could still see the expected bond market rally when weekly cycles and bond prices bottom. Yields, however, won't get back to their lows for a long time. This is another half-hour conversation we're not going to have now. But just to give you an idea of how Charles is looking at a lot of stuff in order to do forecasting. Here, as we referred before, the 30-year bond monthly support line since 86, we sent this out at the beginning of June. The 30 years close to breaking the support line from back in 1986. We're close to our second downside price target of 108.07. The next short-term low is around 621. A close below the support line will give a downside price target of 100. Big move. Okay? That got a lot of conversation. This I'm going to hold off till later because this is the U.S. 30-year bond yield since 1880. And you could see, here's our cycle, there are the yields, and here's the stochastics to it. And this is a very big picture of where bond yields are going to go, and Charles will talk about that later on. I just wanted to put that in at this point. Now we're going to talk about Japan, because everyone's interested in Japan because of the carry trade. For those who don't know, Japan's the cheap bank, and everyone borrows from there and goes and does other things. So depending on what Japanese interest rates and bonds do can determine, obviously, a lot of what's going on in the world. So this was sent out in May. And here you see, again, keep in mind, this cycle line is a combination of 40 or 50 different cycles we found that are based on weekly data. And the Japanese 10-year bonds continue in a trading range. By mid-June, however, said this in May, the longer-term cycle is turning down again. So this we said in May. Let's see what happened. This was sent a week ago. Weekly cycles on the Japanese 10-year bonds continued down until mid-August. So in fact, that's what happened. Let's go to the next one, Japanese bond. Now we add the waves. Okay, so we did cycles, now we're going to add the waves. Now, let me say something before we move ahead. 2 years ago, someone asked us to do an analysis of Google, and it was 450 at the time. And the question was, like everyone thought, including everybody thought Google was going to 600 at the time. A big place asked Charles, Charles, what's going to be? And Charles said, I don't think it's going past 470. If it does, it goes to 550. But I don't think so. What he was really saying was Elliott wave retracement 1 of a wave 3 was a 1.6 retracement, was going to that point of 470. And if it went past, the way the Elliott wave works, there's 3 retracement levels in a wave 3. It's not hard to pick them up. It's not easy to pick them up, but it's like being in the subway. If you're in 42nd Street, you take the train, it goes to 59th, 86th, to 125th. There's nothing in between. That's how the Elliott wave works. So when he gives a target, he says the first target's got to go to. If it breaks through, and that's always the question, how much does it break through? If it breaks, is it a significant breakthrough to go to 86th Street? That's basically the question all the time. And so, but what if cycles are topping at 59th Street? You started 42nd Street, you started at 400, went up to 450, that's 15, started 42nd, got to 59th Street. Cycles are topping at 59th Street. In effect, the cycles refine the Elliott wave analysis to determine which retracement it is. So Charles said, based on the cycles topping at 470, Google's not going past. Everyone thought he was crazy, and he was right. So here's an example. Now that we just did the cycles, let's add the wave analysis. Weekly cycles on the Japanese bonds are down into mid-August, as shown in the accompanying cycle chart 1 of 2. Our downside price target for wave 5 is still around 130.40. So he's using a lot of tools to come up with this. So it's not done in 2 minutes, and it's pretty powerful. Okay, U.S. bond 2 years, very long-term view. So I bring you down, and now I stretch you back out. Very long-term cycles are topping and down into 2025. This is the 2-year, not the 30, not the 10. A close below 101.26 is a sell signal. This was in May and could give a downside projection to 100. First weekly cyclic low in the middle of September. Sunspots. This is the one got a lot of commentary last time we were on CNBC. Let me read this to you. Sunspot cycles have a very strong correlation with equity markets. You could think it's crazy. It sounds crazy. Here's how they correspond with the cycles. I'm just going to present the information. You can decide. Sunspot activity influences electromagnetic fields on Earth, and as the sunspot activity changes, it appears that people's behavior changes along with such activity. As I was saying, we think our work is deeply psychological and arguably not technical, but in fact deeply fundamental. And this is an argument. We have a lot of fundamental clients. It takes a while till they come around. They're long, short. They're fundamental, very hard to say, what is this? Okay, you don't agree, but would you like to know when the bottom is? So we somehow work it out. Anyway, this is the sun. So therefore, the equity market rose in 2000, caused ostensibly, to paraphrase the words of then Chairman Greenspan, by overdone exuberance. What he called exuberance corresponded, as seen in this chart, to a high level of sunspot activity. Dr. Shapiro, you love this stuff. It peaked in 2000 and bottomed in 2002. Now, although we expect weakness next year, the sunspot cycles show increased activity, ready, to 2013. And we don't expect the bull market to be over until it tops in 2013. Not to say it's going to be a straight right up. It's not. But this is a very big picture that someone can say, okay, we have some tool to maybe make some attempt to say what's going to happen for the next 6 years. Now let's go down to Brazil. Okay, Bovespa. We have a lot of clients there, a lot of clients investing in this. So the Bovespa, this he said in 9/28/06. Again, there are hundreds and hundreds of examples. We just picked out some. He doesn't really know what's happening in the economy in Brazil, other than he studies a lot of stuff, but you look at the cycle. So in September of last year, Charles looked and said, the Bovespa is trying to find a bottom. Cycles show the easy part of the next leg up is going to be from 2006 December to 2008, it was 36,000 at the time, and now it's 58,000. He likes Portuguese music, but he didn't know that much was going on down there. Apple. This was 8/17/06. Apple did give the expected breakout on our point and figure chart. How many people here use point and figure? I don't see a lot of hands. 10% of people here use point and figure. I would suggest maybe 20% should use point and figure because it's a very, very powerful tool. Apple did give, by the way, Bloomberg has point and figure stuff, right? Okay. Apple did give the expected breakout on our point and figure chart, and the stochastics is close to turning up. You have to combine things. We consider this a long-term buy signal. I don't have to say anymore. Today's morning update. This goes out twice a week, Monday and Thursday, and we send charts Sunday night and Wednesday night. And let me read it to you. Our outlook is unchanged. We expect the indices to continue their trading range of the last few months, and he's been on buy signals since last summer, with some small surprises to the downside as seen yesterday, not today, since short-term cycles are down. Most cycles seem to bottom around 717. You may forget about it when something happens today, but let's just watch. And we're looking to buy around that date. In the meantime, our overall technical model, which is made up of 200 indicators, separate from cycles and separate from waves, okay? And I'll discuss that maybe afterwards when we're sitting and having a drink. And Dave said from now on you're going to give drinks to the speakers before, not afterwards, right? The overall technical model continues in a buy signal, and as mentioned many times before, there's no reason to go short. Everyone seems to be itchy to buy gold, and everyone seems itchy to go short. Those are the calls we're getting. Can we do it? Can we do it? Can we do it? We still see the strength in gold and gold stocks as a bounce away for up. We think gold's a good long-term buy, but not yet. Short-term cycles did top. We're still in equities here. We're looking to go long in a few weeks when longer-term cycles bottom. Crude, short-term cycles continue up while weekly cycles are topping. However, there could be more strength as long as there's no close below 72.90. He called crude from 13 up all the way. U.S. bonds continue in a complicated way for up. When he says it's complicated, it's very complicated, which can take some time. He's basically saying bonds are bottoming in November. Okay? We sold the 30-year at 112.08. I sent it out this morning with a typo, 102.08, and quite a few people reminded me of it. We still want to buy. I did fix it. Once our downside price targets of 104 on the 30 and 103.02 on the 10 are reached. Bunds still have a downside price target of 109.50, and we have no reason to go long. Euro. The euro continues on a buy signal. Our upside price target is still above 139. Yen, the strength the last few days seems to be only a small wave for up. We still expect to get a long around 124.60, but a New York time close, because yen's always trading. So when is that? A New York time close above 121.50 will also get us long with a tight stop, since 124.60 is still a valid price target. No system's always right. We're not always right, but when we're wrong, we like to know it right away, and we set tight stops on things. And euro today, upside price target on the euro is still 139. Take a look at the, yeah, there we go. You see this is daily. You see the top in the euro and the top there and the top there. So we assume the upside price is still 139, but the problem is they're close to a short-term high, and probably be difficult for the euro to get from 138 to 139. A lot of people are looking at uranium these days. Not all for positive, happy reasons, but they are. So weekly cycles on mega uranium are up until August 8/22. We have a lot of funds that ask us. We do a lot of special work for funds. And so that's the beginning part of the middle part of the presentation, and I welcome any and all questions, and Dr. Nenner, Professor Nenner, my partner and my friend and my teacher, would be happy to answer any of them. So who's going to start? Okay. Charles, are you there?
Yeah, I'm here. It just is bad for European viewers. It reminds me, remember last time I had a presentation very late in the day, and this next day this guy came to me, and he says, I listened to you, and I couldn't sleep all night. You remember I asked him, well, you thought it was that great? He says, no, but if I fall asleep during the day, I can't sleep at night. So I hope everybody can still be awake, and we'll continue.
So anyway, why don't you get up and tell me who you are and... Okay. Charles, I'm going to repeat the question, so don't worry.
Right.
Mhm. How do we find this? How do we come up with the cycles? That's your question. Charles, Adam is asking, how do we come up with the cycles? How much are we going to tell him?
Well, I started to work in the early 80s, and what I did is I came from medical school, and I watched CNBC already at that time, and it talked about things going up and down, and I thought it was interesting, so I went into the library and looked at the Wall Street journals for many years, and happened to find out that at certain lows and certain highs, a certain part of trading days or trading weeks away, separated from each other. So I did everything by hand, and I started counting days and years from low to low, from top to top. And of course, that was kind of primitive and hard work, but later when there was a development in the computers started taking over. And what you see in the broken cycles is that there are major highs, let's say 2 years apart, and within those 2 years, you find cycles from high to high every 6 months. And then within the 6 months, you find them every 3 weeks. And then in the 3 weeks, you find them every 3 days. And that's how it adds up. And then if they all line up, it's very easy to see a high or a low. But sometimes some go up and some go down. So then we use Fourier analysis to find the end result, as shown by David on the graphs.
The answer is it's complicated. And I wouldn't tell you anyway.
Well, the answer actually is that it's a deterministic view on the world.
Right.
That is, things happen in a certain way, and it will always go that way. Whatever people do doesn't make any difference.
That is the assumption behind this, which is we get a lot of arguments, we get a lot of good conversations. I'm happy to have it, not now, another time, because we welcome that. You know, we have hundreds and hundreds of clients, and they're all friends. And they tell us we're crazy sometimes, but then they say, when's the end hopping? So, you know, you ask a very good question. That's the basis of it, is actually the assumption Charles just said, that human interpretation of events never going to change, so the patterns. Now, you want to know what is the math that creates the pattern. It's the program has 60,000 lines of code. It's complicated.
Would it be something like volume in the base
No. 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 But afterwards, let's talk, because what's your name? Just let me walk over. You know, excuse me, let me stand here. I can walk over to you, okay.
So it's something actually that's coded, it's not just looking at the cycles.
Tell me what you mean. Tell me what you mean.
In the sense that it's what you're saying, 60,000 lines of code. It's programmed in the sense that, say, other trend following models, albeit they're very different, they're coded as well.
I don't really understand the other stuff so well, so I can't really compare, but the 60,000 lines of code we're running iteration after iteration after iteration after iteration. I'm not a computer whiz, but we have teams of people doing this stuff. I mean, he can't be sitting all day, you know. He's the heart surgeon. The heart surgeon comes into the surgery after the people do the pre and post-op work. Charles could sit, he'd be sitting all day, because here, imagine you do the Intel chart with 28 cycles, doesn't look good. I got to knock it down to 16 cycles. Which ones? It would take so long to do it. Thank God it's a fast program, but there's so much work. We have so many requests from the clients that the program does a lot of it, but there's still an art. This is not just press a few buttons. So the program is doing stuff. I don't fully understand it because it's complicated math. It's using rocket science based on one particular person named Bartels, right? And it's very complicated stuff. And so I think what people have told me, it's unlike others. I don't really know, you know, I don't know if that answered your question, but. Is it back testing? Charles, the question is it using trend following models?
No, not really, because it's a total different thing. Whatever it does, it only goes and finds the tops and the distance between the tops and the distance between the lows.
This works not just for markets. Like we use this. Charles originally was in medical school. Charles, I can tell the story, right?
Yeah, I don't know which story, but you can tell it.
Okay, good. He was in medical school, Dr. Nenner, and the professor said people get admitted to insane asylums at the same time, not during a full moon. And he got up and said, "What?" And he started looking, and it turns out he's a natural pattern recognition person, obviously. And so this is not only in markets. I mean, we know Fibonacci. If you Google Fibonacci, you'll find that the Fibonacci sequence is one of the most prevalent patterns in all of nature. The way your hair grows on your head, whatever's left of it, the way fruits and vegetables, music. I started playing piano because the professor said the keyboard's a Fibonacci sequence. It's all over the place. So it would make sense that the Fibonacci, which then became Elliott, would make sense that would be in markets too. Not so easy to find. So cycles are just another piece of looking at that natural, or Charles says deterministic view that things are happening, that nothing's going to change. The Fed's not going to affect the interest rates. Did I just cause now I got the hands up. Right here. What's your name?
David Carrier.
David, okay.
I'd like to know what is Charles' forecast for the Hang Seng index.
The Hang Seng.
Number two, how does he see technical analysis as a discipline 50 years from now?
Ooh, great question. Great question. He won the question so far, Charles. He wants to know, number one, about the Hang Seng, and number two, how do you envision technical analysis 50 or 15? 50 years from now.
Well, first of all, I don't have everything ready. I thought we had the Hang Seng like 24,500, but I'm not sure. I have to look it up. I cannot remember
I'll show you afterwards.
everything. 50 years from now, I tell you that I worked a while with Merrill Lynch, and then I retired in 86, 87, and I didn't go back to this work until 98 when I was at Goldman. And I was surprised that nothing improved in those 10, 11 years that I wasn't in the business. And I don't think anything is improving. So I think in 50 years, we have the same situation. And one of the reasons we're not improving is that politicians and people who in the economic field cannot accept that things are determined because they will not have a job. Somebody who is in economics will say, I look at my models, I look at economic parameters, and people who are in governments, they can say, listen, vote for me because I will do this, and I will do this about the deficit, and I will do et cetera, and they have nothing to give if it will be true that everything is determined before. So when I start teaching this in university, I always start with saying it's not so difficult, but it's not an intellectual problem, it's an emotional problem, because I will try and convey that the world doesn't function as they taught you for the last 40 years. So since it's an emotional problem, and since I see that in the last 20 years there's almost no improvement in the way they analyze markets, I think in 50 years we're still stuck in the same situation. There have been people like Gann and Elliott and just some people who did great, but the jump in the consciousness of the investing public was too high, and nobody ever followed them. So my opinion is in 50 years we're stuck in the same position. We're going to make the same mistakes. We're going to have the same kind of recession, depression, same kind of market crashes. The only thing is, it is possible to predict when they're going to happen based on the cycles.
Good question. What's your name? Ed, where are you from? Okay. Charles, second best question. Ed from Opus Trading wants to know, how do you derive your price targets? Because we figured out direction. How do you get levels?
That is, it's also mathematical formulas. It's a pity I'm not there. Maybe we can do it when I'm back in the States in 3 months. That's really something I have to show on a blackboard, or I really, it's a lot of mathematics, and it's not something I can do to the phone, but it's based on the same situation, that if I throw something in the air with a certain momentum, we can calculate how high it goes, And the assumption is that if a stock takes off with a certain momentum, then you know exactly how high it goes. It doesn't go at random and you have no idea. So that's what it's based on. But again, I cannot explain the mathematics to the phone.
Keep going. You're here.
Did you say that the S&P was going to buy in a couple of days based on the cycle?
Yeah, he said the S&P is bottoming at 717.
Is there any occurrences of cycle inversions?
Charles, are there any occurrences of cycle inversions? Let's define an inversion.
Well, an inversion, let's say the inversion is, I think the definition is that a top can become a bottom and a bottom can become a top. And if something goes in a certain direction, then if it goes up into a certain date, you know it's going to be a top, and otherwise it will be a low. I don't work with inversions. I just work with very clean tops and lows, and a low is a low and a top is a top, and it's not there is something happening on the day, the market's going to turn around, but I don't know if it's going to be a low or high.
Clearly, the S&P is rallying into his cycle low.
Well, we have a few days, right?
What?
We'll see. We'll see in a week. Next question. You had one, I think. No. There's someone over here. Dave Keller.
Yes.
You're from Bloomberg.
I am.
Okay.
Clearly, cycles are the main input into the analysis.
Right.
And the point figure at the end, I think I saw like a stochastics line in one of these.
Right.
What kind of indicators have you found are most effective to sort of qualify the cycles, determine if something really was a turn?
Charles, what Dave asked was, obviously the cycles are the foundation of the work. He saw point and figure, and he saw stochastics. So which of the other non-cycle work do you use to verify, or when they battle, which one do you use to determine which is the way you think it's going to go?
You mean if the cycles are not in sync?
With the other indicators?
Right, so if I say the cycle shows a bottom, what would you use to say, yep, that clearly was the bottom because this indicator gave a signal that coincides with the cycle? What would you use to qualify this?
Yeah, because Dave's job is basically to help people understand all this stuff. So this is right up your sweet spot. Yeah. No, we talked about this a lot. How do you combine all the things, Charles? And look, obviously he writes it all the time, but some things are saying this, some that don't always line up. But I guess the question is, how do you, in a big picture, view the combination of stochastics and point and figure and the waves in conjunction with the cycles?
Well, that's only if, most of it is based on my what I call my technical model of 200 indicators.
Right.
And that is a model that changes maybe once, maximum twice a year. And it doesn't give false signals. So let's say if it's on a buy signal, and like now with all these small corrections we had, all the time was on a buy signal, the big institutions just stay long, and the traders can use the daily cycles to go out and go back in. I don't go against my technical model. Let's say a cycle is bottoming, and let's say the technical model will be on a sell signal, then the technical model is number one. But I don't remember that it ever happened. The cycles are just telling you if a model gives a buy or sell signal, when to go in, and the price projections give you the level where to go in. But the technical model overrules everything.
Charles, why don't you give a couple of examples of what are the 200, like 5 or 6 of the aspects of the overall technical model that you use that gets updated every weekend?
Well, that's like the old-fashioned technical analysis. I look at moving averages of put-call ratios. I look at advanced decline indicators. I look if insiders are buying or selling. I very much look at the specialists on the floor if they're buying or selling. I have a whole program that looks at the big block trades over 100,000 shares, if they go on an uptick or they go on a downtick, so I see if there's a distribution going on or not. And a lot of indicators that give me advance warning if something's going to change. Usually, let's say if the technical model gives a sell signal, it could take 1 or 2 months until the market starts turning down, and that point is mostly showed by the cycles.
Okay. Any other questions? Yes, sir. Your name?
Yeah. David, Andy Brown.
Andy. Hi.
Well,
Haven't seen you in a while. How you doing?
I'm doing fine.
Good,
thanks.
good.
I'm curious if Charles has had the opportunity, given what's happening in the subprime mortgage market
Right.
and all these new indices, the ABX index or
Right.
credit default swaps, have you done any analysis on that? And if not, have you looked at credit spreads in general? And if not that, then swap spreads.
Charles, did you hear that from Andy about the subprime situation and credit spreads?
Yes, I'm looking at that. It still doesn't look too good.
Now, all right, you heard it.
That's good to know.
Right.
How about financials? You look at the sectors within the S&P. How do financials look like?
The financial is something I'm underweight the whole time. I was short the RK, what was it, the regional bank index, and I'm covering that now. I still think they will underperform, but like I write all the time, nothing to be short. Only the regional banks were short, and we're covering it right now. I think the brokers look better than the banks. It's amazing how the S&P is still getting much higher without the banks really participating. It's not something I still favor very much. The oil stocks, I think there's more to go, and in second place probably the telecom stocks.
We get that a lot of times. When we send out something, a bunch of the funds will get on the phone and say, okay, Charles, this says this says that, and they'll try and weave it all together, which is their job, obviously. That's your job. Charles, what do you usually say when they say it? How could this be this, and how could that cycle say if that's 20%? They try and reverse engineer and say, how could the cycles be that and lead to that result?
Right, and then usually say, I'm not clever enough to answer that. I just do my work.
Right. Right. That's your job. If Charles is going to give an opinion on that, he's not really different than anybody else.
I mean, how could today the Dow go up almost 300 points and the bonds came down again strongly? I don't know.
Right. Any other questions? Yes, what's your name?
Hi, my name is Arthur Meister.
Hi, Arthur, hi.
My question is,
Yeah.
how often does it happen that your predictions show one thing and reality shows another thing? So how often does that happen?
The question is, I'm going to refine the question. What Arthur asks is, how often do the cycles show one thing and the reality shows something else? I guess the question is, how often are we right? Right.
Well, the interesting thing is...
Charles, you have to give them the line. What's the line? The system always works, but he doesn't work so well.
No. The question is, and I don't want to make it difficult, but the question is, when do you suppose something is wrong and something is right? Which means is, can I be off half a day, or can I be off 2 points? I haven't seen actually weekly or monthly cycle not be correct. Also daily cycles. It's very seldom. I don't even remember when there's a cycle top and it goes the other way. It's really, otherwise I had to change my deterministic view of the world and of financial markets. It's not, I don't work with the probabilities. I assume just that something is working. Like if you go on an airplane, it's probably the same thing. How many times does it fly? Well, you go on the airplane, most of the time it's going to fly, and you don't worry about it. So most of the time the cycles are correct, and I almost don't even consider that they would be wrong.
We always say, you know, in business, there's two things the client could say, no or yes. Both cause problems. They say no, you don't have business, and yes, you have to do something for them. So we're like the Hotel California. Our clients check in, they check out, but they never leave. You know? And so that's, I guess, you know, thank God for most of the time, it's been a positive thing to help people phrase, and everybody has different, you know, it's a different complete methodology, so not everybody could use it. And but
well, you can turn it around. It keeps you out of trouble. If a
Yeah.
cycle goes up, at least don't go against the cycle. That's the most helpful situation.
we had a guy today call, and $100 million of bonds. He did the wrong thing, trying to figure out. Charles, remember the discussion we had with the gentleman? He made a mistake. You know, he was going against something. He had a hedge. He took it off. He traveled. We told. That's the hardest thing. What to do when you're in the middle of something between if you're in uranium and you're over here, there's a lot more work to do. It's a lot easier to say, and we don't like to be in at the bottom. You want to make confirmation at the bottom. I'd rather you miss a couple of % to make sure you know that it's going that way. So that's also something. Everyone says, how come you don't time it and go in at the bottom? He wants to be, you know, he's a doctor. He wants to be sure that it is. It's not so simple. Yes, what's your name?
There are cycles that are automatically done like through CQG and Advanced. They have cycles.
Yes.
Studies. Are these cycles calibrated exactly like this cycle?
No,
I
I don't. Charles, you want to answer that? That he's asking, there are other programs that use quote-unquote cycles. Does this have anything to do with that?
I wish there was another program. I would buy it immediately. I haven't seen anything.
Right. Yeah.
But they do.
Yeah, I'm sure, but we use our own.
So is there different properties to these cycles?
I don't know. I'm not familiar with the other one. We just focus. Charles doesn't read that much stuff, other than he wants to stay very focused on the cycles. I don't want to know what the news is saying all that much, because you don't want, even a conversation can influence. Somebody gets on and said, one of our big funds.
So he has never really analyzed
The other competing?
anybody else's cycle?
Charles, have you ever looked at anybody else's cycle stuff? That's
No.
what the gentleman's saying. He stays pretty pure. That's
No.
part of the reason 90% of the calls I handle, 95%, because he is the professor and he's focusing, he came up with it. We've had certain calls, Charles will say, sometimes a guy has a very strong conviction and it affects him when he's looking at gold. If that person said, I really feel, and this is a very good trader, this guy's been doing 20% a year the last 4 years, you listen to him. You know, guy, I don't know who the other mothers are. I really don't know. I don't compare mothers. You know, I mean, I'm happy with this mother. No, yeah, but we built. The answer is he built the car, so he's not looking to buy another one. We have programmers. Maybe they look at the stuff. Maybe there's certain techniques in what they do. You know, the programmers are programmers. I mean, I can't understand what they have in their heads. But I'm sure there's other stuff around. We stay very focused on this stuff because it seems to work.
And you buy this product?
No, this is ours.
But I mean, do I go on that website and just...
No, that's a separate discussion. We have clients. We send the research to clients. We don't. The program itself, he and our team of people look at. Yes.
We had a very strong equity market today.
Yes, we had a strong equity market today.
Perhaps with not the strength of the volume that you'd like.
Right.
Is there a message in that?
What's your name? So I can.
Ross.
Russ is. I know Russ. Russ is saying, Charles, we had a strong equity market without the strength of the volume. What is the message in that?
You know, I almost don't look at volume.
Right. Never.
And you can make interpretation always two ways. You can say, well, you know, there wasn't much participation, so it's probably a false move. Or you can say the move is just starting, and that's why people still have to go on the bandwagon. So I never really understand how to make interpretation of volume, so I don't really work with it.
How about the equity? The equity.
You said equity action today.
The equity action today. What he thinks of it? I think he just said it's either A or B, but cycles are down. Short-term cycles.
Well, you know, you have to remember that we went out of the market around these levels about 3 months ago. We said, you know, it bottoms the 17th of July. So that's about, what is it, about 3 trading days from here. So it's possible it's 2 or 3 days early. I have to take a look at it tomorrow and say, guys, you know, we're 2 days early now, and I think it's a buy. Let's forget about the next 2 days. Even if it goes down, it's not so important anymore.
Questions? Yes, what's your name? Mike, hi. We don't have a fund. We just give, we're very happy you're on this side and we're on this side. We don't trade. I mean, Charles trades in order to be in the positions to know, you know, he's in a bund, so he has to write about it, so he's in it. I have no time. I have to be talking to all of you and everybody, but we don't have a fund. That's a whole other world, and we're very happy those who have it, and we advise a lot of funds, and that's what we do best, and we look forward to continuing that. Let me come and say hello to you. Oops. You still had the best question, Dave. What's your name?
Dodge.
Dodge, hi, nice to meet you.
We don't use this, but from
here today and your reference to point and figure,
Mhm.
when you draw a point and figure chart, there's no reference to time.
That's correct.
It seems to me that although you tend to indicate specific days for the trend of the market,
Mhm.
what is really important is not to trade based on the specific day you're indicating, but to trade with the trend
Mhm.
that you're indicating.
Charles, did you hear that?
No?
Okay. What Dave is saying is point and figure doesn't give you time.
Right.
But you write about time, so the question Dave is asking is, do you trade based on time, or do you trade based on the trend indicated by both the cycles? I'm adding a little bit because and the point and figure, which is not necessarily time-based, just
No, but what I do is, if I see a cycle low, I might bring up a point and figure chart to see if it's breaking out, because that's a confirmation. That's what the other gentleman asked for. So I do look for certain confirmations when the cycle bottoms or tops to see if it makes sense that it's a low or high.
So then your work would be used in connection with what Dave does, because what
Oh, for sure. Yes,
it's more of a complement to what.
exactly. You know, when someone's flying a plane, he's looking at a lot of gauges. There's one main gauge, I guess, that I've been told, and a lot of others. Charles is looking at one main gauge, different versions of it, daily, weekly, monthly, and there's a lot of other sub-gauges around it, which help confirm, and he's constantly sifting. You know, when you run a portfolio, most of the clients we have, the big funds, I guess this is the way it's done, they set up a portfolio, and that's kind of it. They maybe carve away, they reduce, it's more like ice carving than actually, I'm getting in and out of an entire thing. So one level, this is how it works. If you look at the cycles 3 months ago and today, they're going to be pretty similar. There may have been, when he looked 3 months ago at corn, he found 28 cycles, he took out 10, so there were 18 that the computer then combined. Whereas today, if he looks, he finds 24 and he takes out 14, so there's 10 left. So it may look a little different because the math's a little different. But basically, the assumption is that it doesn't really change, that this repeating set of patterns, but it's how he combines it, which is what he assumes you're all doing anyway. Any other questions? Yes, let me come around. This is fun. What's your name? Luis.
Two questions. One is
De donde es? Oh, de Merrill Lynch, okay.
yeah.
Yeah,
The cycles.
Yeah.
How has throughout history, the computers and the distribution information
Great question.
affect the cycles? Are the cycles shorter, or is it something constant?
Charles, I'm going to mention what Luis said. Because there used to not be computers, and there are now, what's the difference between what was calculated then by hand, which interestingly enough, there was a family called the Rothschilds that used to do this. They did cycle work before computers. They made a few bucks. And now with the computers, your question is, are they shorter now?
Or longer? I don't know. Is his cycle, which is everything based on constant, or depending on...
Well, again, you can take cycles based on daily data, weekly data, monthly data, yearly data, decade data, 100-year data if you have enough data. So it's the same math whether you have a computer or not, just does much faster now. But when you're saying maybe whether the business cycle seems more condensed now. That's when you're saying your cycles, tell me exactly what you mean. I want to answer your question, but I want.
Your methodology of cycles,
Mhm.
is it something that is constant throughout time, or is it something that in later time?
Oh, right. Charles, the question is, do the cycles stay constant throughout time, or can they change going forward?
No, they can. According to what I do, is based on what Schumpeter did.
Does everyone know Schumpeter? I mean, you should read Schumpeter.
The economist Schumpeter actually also believed that cycles are fixed, and he worked with Jugler and Kitchen cycles, which are economic cycles. What happened was that he predicted in 1929 that there would be a crash, and there was a crash, and then Keynes came, and Keynes said, you see, if we take care of the money supply, then it will not happen again. And then all the politicians said, you know what, this is our hero, because now we can say to the public that we can change something. And I believe that it's just an illusion. Nothing has changed. So talk about the cycle. There's a clear business cycle of about 9.5 years, and it just ended in the year 2000, and it was just long enough for everybody to get caught and say, well, this time because of the information era, everything is different, and there's no business cycle anymore, and boom, then the whole thing came down. So it's very interesting that with all these cycles that exist for so long, they just stay the same. Now, why does it have to do with interpretation? The idea is that, let's say, the cycle on the bonds is up, and at 8:30 in the morning there comes out a number with a lot of inflation, and the bonds go up. How can they go up? Well, people say it was a bad number, but this was the last bad number. From now on, it's going to be less inflation. So it still has to do with interpretation, and like David said, that never changes. So based on that, I assume that cycles never change. If they start changing, I have to do work, but for now, I haven't seen any change.
Yeah, Louis, go ahead. I'm sorry? No, Bloomberg is Bloomberg, and Charles Nenner is Charles Nenner, but the data, Bloomberg to us is a dictionary, is amazing. Bloomberg symbol, someone asked something, we don't have it, well, the Bloomberg symbol is that. Bloomberg defines the data, we massage it. Bloomberg does a lot of stuff also, but there's nothing.
Here in the seminar, there's nothing that's applicable to Bloomberg.
When you say nothing applicable to Bloomberg, no, well, nothing, I mean, we sell research to our clients. Bloomberg sells data, including research, but it's different, and so Dave is trying to open everyone's mind to the fact this exists. There's other people that focus on point and figure. There's other people that ostensibly are just Elliott wave. We use that as part of an overall, so we're kind of combining everything, which is unusual. I don't think anyone, we not only combine everything, we cover everything. And I've been told we're the broadest research firm because it doesn't matter what it is. If we can get enough data, we'll cover it. We don't have to know what's going on in China Fund or Japan. We were doing all this stuff early on before. Yes?
Bloomberg has some technical.
Yeah, Bloomberg has amazing stuff. Yeah.
Can they put this technical
No.
program on?
Can Bloomberg put this program on? Call Mike after he gets out of office and have him make an offer. I don't know. I mean, no, I mean, this is separate. Yeah. No, it's a very good question, but no, it's not available for them.
Well, it's not your program. Just get this to the mythology.
Well, if you can have them come and get 60,000 lines of code to do this and find 10 people like Charles, I guess they could do it, but it's not so simple. I love this company, Bloomberg. I mean, so, Anyhow, any other questions? Or let me come around. There'll be, I'm available at the bar and after today.
No, I'm just a little confused by,
Yeah.
You're talking about the cycles being somewhat constant.
Yeah.
But on the other hand, you seem to be talking about solving for what the present cycles are and then eliminating or filtering out certain ones
Yes.
that still aren't the problem.
Yes, you're saying, how do you, yeah, go ahead.
So what I'm saying is, other than having some of your own hidden subjective criteria.
Which we do.
No, but there's got to be some, is it all subjective or it is objective?
Charles, the question is,
How you're determining to filter out certain.
yeah, let's go back to Intel. That's a great question. That's a great question. Charles, we're going to go back to the Intel chart. Go back to Alex Rodriguez. And the question is it somewhat subjective if that happens to show 9 cycles when we originally found 20? How do you eliminate what you think in order to come out with something which is going to be, or is it data, what did you say?
Best fit.
Best fit. The answer is...
Well, let me answer that. It's not always...
He got it.
It's not always...
Charles,
that
hold on one second. Jay's going to ask one more question.
Well, I also just wanted to clarify, because on the one hand, we were talking about cycles being constant, like the con-drift cycle
Yes.
and 9.5-year equity cycle,
Right.
whatever. But on the other hand,
Business
we're talking
cycle.
about looking for cycles.
Right.
In other words, Fourier analysis, if
Right.
I'm mistaken, actually goes back and sort of solves for different
Oh, for sure, for sure.
So they're actually two different things.
Right.
How do you...
Charles, you want to take it, or you want me to try?
what was the question?
The question is, The question is as follows. It seems like we might be saying two different things. On the one hand, we're saying cycles are constant, but on the other hand, we're always, let's say we take Intel and we find on a monthly basis, we find 17 cycles and you pull out 8 of them, and the remaining 9 together, here we are, we're looking, that's just corn, doesn't really matter. The remaining 9 seem to, in a combination way, show exactly what the price line is for copper. So are you really finding, are they constant if you have to be picking out ones to make it work? Is that really your question? Yeah. And I think, Charles, let me try and answer that.
Okay, go ahead.
It's a semantics question. What are cycles? We are saying cycles are a combination of cycles. Look, life's complex. Everybody's affected by a lot of different things. It's summer, it's winter. So there's no program that says these are the copper cycles, daily, weekly, monthly. There's a lot of them, and we have found certain, the longer ones are more powerful than the shorter ones. We showed you that, I believe, with, which chart was that? Was it? Yeah, the longer-term corn here. This will answer your question, maybe. The longer-term weekly corn cycle that projects most weekly top highs is top again. Charles, I'm showing the weekly broken cycle for corn.
Yeah.
So here, what we're saying, we're making an assumption that this spice in the pot of food called copper spice souffle, which has 28 ingredients, these 28 cycles, maybe it doesn't taste so good with 28 ingredients. We have to pull out the paprika and pull out the salt and just be left with 10 ingredients, and those 10 ingredients taste best and will be the ones that will give us the best corn feeling. So
yeah, but remember, let me say something.
Okay.
It can find cycles, but it's not always statistically valid. So there are certain ways of doing statistics to say a cycle is recurrent or not recurrent. So if the statistics showed me that it's not a recurrent cycle, then I take it off.
So that's a piece of it. So a piece of it is math.
Some type of an objective filter.
For sure. But there's also...
This is a more consistent cycle.
Right.
Or one that I would use.
Right. And the assumption is, look, there was a lumber cycle, one lumber cycle, that just was unbelievably predictive for 17 months. Just, it was one of these... Now, in theory, what we're really saying is just follow the big one. Here, in many ways, you're saying eliminate all of them except that one, because that seems the one that's carrying the day. In fact, the program, you know, this is the art. He has to combine.
Yeah, but what you see is if you look at this, I don't know if you can see those longer-term weekly corn cycles, the red one and the blue one.
Yeah.
So the red one is the major one that was stopping, but then corn was at, I think, 110, and it went up to 450, and it stopped right when the next one, the blue cycle, was also turning down. So the red one was the major one, and the one that came after that was the blue one,
Right.
and so it could still go up as long as the blue one was up.
Right. Yeah, I'm sorry. Again.
I think it's indicating the trader's dilemma to actually, and challenge rather, to customize the right indicators for a given security market or
Right.
time. And I think some people think that it's just possible to standardize a set of technicals that work into any circumstance.
Right. So the question he's asking, Charles, is it? He's saying it's a dream for traders to be able to standardize for any particular security they're trading, so that you'll have, in fact, these indicators giving you the clearer sell signals. But the reality is, you see, it's an art.
Yeah, but I just want to say something which I find important, which you didn't mention about the sunspot cycles.
Yes.
So the sunspot cycles have influenced the electromagnetic field on Earth, and that changes the electromagnetic field of every investor. And that changes his appreciation for bottoms or for tops. So that's why this is so connected, because we want to know, so why is the human interpretation being positive, this is low, it's a high. So in the end, you get back to the sunspot, and then you see that there's a big correlation between the interpretation down here and the sunspot activity changing the electromagnetic field of the people that are dealing financial markets. And that's what Greenspan felt. He just didn't know how to put it into sunspot theory. but he felt there was overreaction. And why was overreaction? Because the sunspot cycle was stopping. So there's much more to it, but we don't have time to go into it.
Okay, anyway, Charles and I thank you all immensely for coming, and we are available to any and all of you now and afterwards for questions and further discussion. And we thank Bloomberg and Dave for, we pulled it off despite the efforts of the security guard in Amsterdam.
Yeah.
Thank you. Thank you, Charles.
Folks, it's well after midnight in Amsterdam, so please take a moment with me and thank Professor Nenner for staying up late to talk to us. Right?
Charles, you still there?
I can stay on the phone to answer questions.
I'm sorry, Charles?
I can stay on the phone to answer questions.
Yeah, I mean, that's, Bloomberg's paying the bill, so we should actually do it now, because otherwise I have to pay next week. So if you have any questions, he could stay on the phone, or we can arrange to call afterwards. I think everybody looks like they want to go either to the Hamptons or the bar, Charles.
Okay. The bar is closer.
So the bar's closer. The bar's on that side. Anyway, thank you, Charles, and we'll speak tomorrow.
Thank you everyone for attending. Appreciate it.
Wow. So hold on, let me just deplug myself. Yeah.
We'll talk later.